Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Monday, April 6, 2009. Producer prices in the Eurozone fell another 0.5% in February, leaving them 1.8% weaker than in February of last year. It's the biggest annual fall since April 1999 and is the seventh straight month that prices have declined on the month. The data gives the ECB more leeway to cut rates as the economy continues to experience disinflation. The ECB cut rates by a smaller than expected 25 basis points last week, leaving the door open for more rate cuts in the coming months. The Eurozone saw its retail sales drop much more than expected in February. On the month, sales were down 0.6%, doubling forecasts, while the annual rate declined by 4%. That annual decline is the largest since records began in January of 2000. Those figures underline the weakness in consumer spending despite decreasing prices. Consumer confidence will remain pressured as unemployment, which reached a three-year high in February, continues to rise as a result of the recession. The euro hit a 5-month high against the yen overnight, testing the 137.40 level in the hour prior to its Eurozone releases. Stocks rose in Japan despite a missile launch from North Korea over the weekend, as Japanese stocks reacted to the news that HSBC raised almost $18 billion in its recent stock rights offering. However, whatever risk appetite that remained after Friday was chopped down in later European and New York trading as stocks fell in both Europe and the US. The pair slid 270 pips from its high and then found support at the 134.40 level, which corresponded to an upward sloping line of support set up from last week. The euro-dollar pair saw a similar move, though here the euro fell below its low from Friday to test the 1.3370 level. The move from high to low amounted to 200 pips, with the pair finding support near 1.3360. Weaker stocks led the move towards the dollar and its safe haven status. The pound-dollar pair reached the 1.4960 level overnight before retreating to the 1.47 level, effectively wiping out the gains we saw on Friday. A report concerning estimated loan losses at banks pressured financials and increased the risk appetite. The FTSE 100 in London, which started the session in positive territory, was down close to 1% by the European close. Still, this pair has had a strong run-up last week, and today's action may prove to be a correction to the upward trend. A return to the uptrend will depend on how investor sentiment shapes up the rest of the week. The dollar-yen pair also rose to a 5-month high, moving above the 101 level to 101.45. The pair then receded back below the 101 level, though not showing the same steep fall we saw in other pairs like the euro-yen. That bolsters the case that the breakout to the upside we saw last week may continue. U.S. stocks were down, with the Dow Jones down more than 1% in the middle of the day as investors braced for first quarter earnings, but the worst of the losses were pared down prior to the New York close. The U.S. dollar-Canadian dollar pair saw a sharp reversal of its action to end last week as well. The pair, after touching a low near 1.2225, rose 200 pips to the 1.2430 level in early New York afternoon trading. The loonie was pressured by risk aversion, weaker oil prices, and a sense that the Bank of Canada may be moving to the quantitative easing measures already taken by Japan, the UK, Switzerland, and the US. Economic data from Canada was also disappointing. Canada saw its building permits decline 15.9% in February, a much bigger fall than was expected, and shows that the housing market is feeling the ill effects of the country's economy. These figures do tend to be rather volatile, but it is the 5th straight month that permits have been down. In a second release, the IV PMI, which measures purchasing managers' activity, fell to 43.2 in March. That disappointed forecasts of an improvement, though any figure below 50 indicates contraction in purchases. Tonight, New Zealand posts data on business confidence, and Australia releases a measure of its construction sector. Later, the Bank of Japan will conclude its interest rate meeting, which will be followed by the Reserve Bank of Australia's decision. Overnight, the UK posts data on manufacturing and industrial production, while tomorrow the US reveals data on consumer credit. And that wraps up today's news in the Forex markets. Thank you for joining us here at CMSFX.com, and happy trading.